Hi everyone, welcome back to this week's Technical Insights. Global equities had a positive week as stocks jumped on a softer than expected US job reports. The US Fed also reaffirmed that interest rates are restrictive enough and does not see the need for a rate hike. This eased investors' fears that the US economy may be overheating or reaccelerating and hence kept alive hopes of a rate cut this year. Following the April weaker than expected job growth numbers and moderating wage gains, markets are pricing in a second rate cut by the end of the year. Fed fund futures are now pricing in a 50% likelihood of a 25 basis point rate cut in September, according to CME Fed Watch tool. Before we go further, let's do a recap of how the markets have ended last Friday. Our Singapore Straits Times Index closed lower on Friday, falling 4 points or 0.12%. In Asia, stock markets in Japan and China were shut for public holidays. Hong Kong Hanseng Index led gains in Asia, rising 268 points or 1.48%. Taiwan 50 Index also rose 148 points or 0.95%. In the US, the Dow Jones Index rose 450 points or 1.18%. S&P 500 Index surged 63 points or 1.26%. Nasdaq Composite Index rallied 315 points or 1.99%, the best performer among the three US indices last Friday. All three US indices managed to cap off a winning week. The Dow Jones Index rose 436 points or 1.14% for the week to 38,675 points, clocking its third consecutive winning weeks. Broad index S&P 500 gained 27 points for the week or 0.55% to close at 5,127 points for the second consecutive winning week. Tech-rich Nasdaq Composite Index also jumped 228 points or 1.43% to finish at 16,156 points. 10-year Treasury yields briefly dropped below the 4.5% mark, and that benefited rate-sensitive mega-tech stocks in the tech-rich Nasdaq Composite Index, with Nvidia and Advanced Micro Devices advancing more than 3%. Microsoft and Facebook parent Meta Platform gained 2% each. Apple also advanced nearly 6% after it announced a $110 billion massive share buyback program. In Asia, Hong Kong stock extended weekly gains as technology and banking shares helped the market further into a bull market territory, following the dovish comments from the US Fed. The Hang Seng Index rose 824 points or 4.67% on the week to close at 18,475 points, rising more than 20% from their January low, entering what we define as a bull market territory. Hong Kong Tech Index also jumped 253 points or 6.8% to close at 3,971 points. Index heavyweight Tencent and Alibaba topped the turnover list. Tencent rose 1.2% to Hong Kong dollars $364 and Alibaba added 4.1% to Hong Kong dollars $79.20. Week to date, our STI index tracked the rise in the US market as well as the region, gaining 0.39% to settle at 3,292 points, its second consecutive winning week. Top performer in the STI index last Friday were Jardine Matheson Holdings and Venture Corp, up 2% and 1.76% respectively. So let's go to the charts and analyze if both stocks will continue the rebound and rise further in the next few weeks. First, let's have a look at Jardine Matheson Holding. We did an analysis on Jardine Matheson on the 8th of April video. We identified that the MACD line then could break above the signal line in the next couple of weeks, and once a crossover of the MACD line above the signal lines happen, it could signal a change in the direction of the price upwards. The immediate resistance then was the 20 days moving average or the Bollinger Band basis at $37.50. A break above this level, Jardine Matheson share price could retest the 50 days moving average and the 100 days moving average currently around the $38.50 level. Fast forward to this week, Jardine Matheson share price closed at $39.29 and already hit both of that resistance level target. The share price hit a high of $39.58 last Friday, which also breached the upper bound of the Bollinger Band at $39.31. The MACD indicator is now showing very strong positive reading, hence the uptrend is likely to remain intact for now. The MACD line has also breached the zero baseline and the signal line will likely follow suit in the next couple of weeks, indicating that the uptrend is likely to continue. The latest RSI reading at the 65 points level is also signaling strength in the uptrend momentum that we are observing right now. And there's still further upside to come before we hit the 70-point overbought level. So investors trying to get on the strong rebound of Jardine Matheson can use the 20 days moving average or the Bollinger Band basis now at $37.23 as the short-term support to get back on this upward trend. Next, let's take a look at Venture Corp. Venture Corp share price has been on a steady uptrend since the low on 30th of October last year at $11.36. The share price reached a high of $14.74 on the 9th of April, which is the current year-to-date high. Last Friday, closing price at $14.46 is about 30 cents away from the year-to-date high, which will likely be the first resistance level. Above this level, the next resistance level will be the 17 July high last year at the $15 mark. These two resistance levels could signal that there could be limited upside for venture share price. For support level, the 50 days moving average, which is the amber line that you see here, has shown good support for Venture Corp share price since the beginning of the year. Further support could also be found at the lower bound of the Bollinger Band at the $14 mark, or even the blue color line, which is the 100 days moving average at $13.89. The MACD indicator is showing a neutral reading right now, with the MACD line and the signal line at the same current level. The latest RSI reading is at the 54-point mark, just 4 points above the 50-point neutral mark, which shows a very slight positive momentum, hence also indicating limited upside movement. So for investors considering getting into Venture Corp, it will be more prudent to wait for the price to retrace back to the support level of the $14 or the 100 days moving average at $13.89 before getting back in again. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest content that we have for you. And I'll see you again next week in the next Technical Insights.